here with part two in our look at markets that have been a little bit surprising in the first half of 2011. Last time we looked at disappointments. Today we look at some overachievers. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons and I'm with Greg Willett, the VP for Research and Analysis at MPF Research. So Greg, let's get started with this list, the top three overachievers so far in 2011.
Jump right in on this, and we're going to start with one where the revenue growth number for the first half of the year, in fact, exactly matches the U.S. norm. So what really makes this as a winner is it's one where most people really didn't expect it to move up from bottom tier to middle of the pack. And the market is Phoenix. What we see in the first half of the year is that revenues are up 3.6%, a whopping 2 full percentage points gained in the occupancy rate, plus a 1.6% increase in rents. You know, Jay, every time we talk about Phoenix, and you just did a separate video on that individual market, we always focus in on that east side versus west side split. And what we see on the east side, those are the upscale suburbs. Occupancy is pretty much completely full at this point. Rents are moving nicely. That's exactly what was expected to happen this year. But this one moves into the overperformer category because of the west side. Still struggling to some degree there, but big improvement in occupancy in places like Peoria, Glendale, the southwestern tip of the city of Phoenix, with, again, occupancy increases 3 to 5 percentage points just in the first half of the year. Not much rent growth yet, but some really encouraging signs. And so this makes Phoenix a market we really like moving ahead.
And next on the list is my hometown, Charlotte, North Carolina. And Charlotte has some similarities to Phoenix in that, well, number one, it was at the beginning of 2011, we did identify Charlotte and Phoenix as two that could surprise, and sure enough, they have so far in the first half of 2011. And like Phoenix, Charlotte was hit hard during the recession on the occupancy side. A lot of new supply came online at the wrong time, but we've seen some solid progress in the first half of the year. Revenue growth for the first half is 3.9%, with occupancy up 1.3 percentage points, and effective rents for new leases are up 2.6%. And Charlotte came into 2011 with a top tier in pretty good position. A big block of new supply came online in 2009, a little bit in 2010, but those new units leased up surprisingly well, or faster than expected. And so those units were already in pretty good shape at the beginning of the year. But what's really been surprising so far in 2011 has been the performance of the bottom half of the market. Apartments built in the 1980s saw occupancy improve 2 points in the first half of 2011, and 1970s vintage properties saw an increase of 3 points in the first 6 months of the year. And actually, we even saw stronger rent growth in the first half of the year in these older apartments than we did in the top tier. So that was a bit surprising, even though occupancy rates remain a good bit softer in those older units. And putting Charlotte in the national picture, Charlotte was lagged behind the national norms for revenue growth in 2010. It's now about in the middle of the pack. But by the end of the year and going forward beyond that, we think that Charlotte could see revenue growth actually exceed the U.S. norms.
So Jay, let's go to one more. To me, the really big surprise on revenue numbers in the first half of 2011, that is Seattle. What we see here, revenue growth of 6.6% first half of the year, 1 percentage point in occupancy, and 5.6% increase in rents. Way beyond our expectations. In fact, that's a little bit better than what we were expecting for the calendar year as a whole. You look at what's happening there, it really comes down to just one thing, and that's that operators are being much more aggressive than we thought they would be in the rent positioning. And you look back historically at what's happened in Seattle, current rent growth is going much faster than it has at other times when occupancy has been at about the same level. You talk to operators, I think that to some degree reflects that they just felt they overcut rents during the downturn. So again, lots of momentum there. It'll be interesting to see what happens in this one when we get to rents that are back to pre-recession levels, because they're not quite there yet on this market. And sometimes when that happens, we've seen markets stall out a little bit.
So what's your forecast here? Do you think it's going to stall out, or should we see more momentum?
If you look at the ones where we've seen some stall as they reach the new high, that's tended to occur when you're getting some really bad news on the economy on the national level. For Seattle, they'll probably get back to that previous high very end of this year, very beginning of next year. So whether they stall out or continue that strong push, I think it will depend on the national economy a little bit.
And Greg, one last question for you. What markets came close to making this top list, and which metros could be surprises going forward?
Chicago is one that certainly has exceeded the forecast that we put out for 2011. I'm going to blame the government on that one. It's a situation where the numbers that were available at the time we were doing the forecast showed some pretty big job losses in Chicago. Those got revised, and had we known what the economy was really doing at the time we did the forecast, we would have been more aggressive. In terms of who might join this list, I think the leading candidate there is probably Orange County.
And speaking of Orange County, join us next time as we take a look at the Orange County apartment market and why it might be a surprise overachiever in the next half of 2011. So for Greg Willett and for MPF Research, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.